Howdy there, folks. A little bit more of a serious video here today we have to do, kind of giving a warning to all investors in the market out there. And, as somebody that's been in the market for 14 years now, I've seen a lot of markets. I've seen crashes. I've seen multiple crashes. I've seen some incredible bull markets. I've seen some markets where everybody gets very, very pessimistic. I've seen some markets where everybody gets very, very optimistic at different time periods. And, I've been through a lot over the past 14 years, and a lot more ups and downs. But as somebody that's seen all this kind of play out, I want to give a warning out there to all investors that are in the market right now, whether it be people that are on the sidelines sitting with money right now, or whether it be people that have been buying heavy in the market and maybe are buying heavy currently. I just want to kind of talk that through and give you guys some good information here that I hope is going to be helpful to you in whatever decision you make in this. And I'm also going to tell you kind of what I'm up to now in the market, given the new CPI data that obviously came out today was 8.5, 8.7 was expected, so a little better than Wall Street had anticipated. The market, obviously, when soaring on the back of that, the Dow was up over 500 points today. The NASDAQ made almost a 3% upward move. S&P 500 was up over 2%, and the Russell 2000, which has obviously been very damaged this year, that baby came, was up about 3%. The market as of right now, just so everybody is aware, the NASDAQ as of right now is down around 20% still from the highs it reached in 2021. The Russell's around 20% as well. So if we get like just a little bullish momentum, let's say tomorrow's trading day, both of those would then be out of bear market territory and would be down less than 20% now at this point in time, which is a pretty steep climb back, because both of those literally just a month and a half ago or so were both down well over 30%. And I mean well over 30%, okay? So it was interesting because, I checked the futures before I went to bed last night. It was like 22 a.m. to be exact. And they were all moving up, which, sometimes you see something like that and it's like, did somebody know something? Like what's going on here, man? Why is the NASDAQ futures already up 0.42%? Like, you usually think that it should be around break even, because everybody's kind of concerned, like, what's CPI going to come out? It's going to come out before the market. Oh boy, what's going to happen here? But, I thought that was interesting kind of seeing that, okay? Now, I did a video on June 10th. This was a few days before the market bottomed. And I'm glad a good amount of people got to see this video. It was called Buy the Dip and Don't Stop. And in this video, it was like a 26-minute or 28-minute video I put together, and it was a presentation on, basically what I believed is you got to buy the dip in the crash, and you just got to continue to buy, right? And I went through all the different scenarios that have happened throughout history and throughout time, and how every single time in a crash, you better be a buyer. The only people that ever regret, there's actually two people that regret a crash scenario. Those people are ones that sell during a crash, and the others are people that are not buying during a crash. But when you're in a crashing market, when you see the NASDAQ down 25, 30, 35%, you better be out there buying it. And if you're not buying it, you will look back, usually within a couple years, sometimes even a shorter time than that, with regret and say, why didn't I load up? Why wasn't I loading the boat? Why wasn't I buying, right? And that consistently happens throughout time. And I'm glad that I put out that video and I showed that particular day I was buying a bunch of stocks. I bought some Oatly at $3.80. I bought PayPal at $79. I bought Amazon at $110. I bought some Chef at $7.54 that day. I bought Honest at $2.80. I bought some Meta at $176, and I bought some Corsair at $15 on that particular day. And obviously, as the market was just crashing, I was out there, buying. Now, on a given day like today, right, we have just an incredible bullish upward move and just countless stocks. Like, I was just looking at stocks I personally have money invested in. And I mean, Shop, 10.5%, Revolve, 6%, Netflix, 6%, Meta, almost 6%. I mean, just look at the moves across the board. Even the Chef was up today. Oh, man, if I was a Chef short, I'd be so mad. I'm like, come on, man. Like, you guys really missed all your earnings and whatnot, and the stock's literally higher than it was just at this time last week. Like, that's just crazy to think. Like, they came in and missed every single number, and the stock's literally higher today than it was a week ago. Like, you can't make this stuff up. So just some incredible bullish moves there. Now, on the downside, this is not good news. Let's be very clear about this. Commodities all pumped today. Not good. And if you're thinking about inflation, like, if we want to continue to see inflation come down, we need commodities to chill, okay? So lumber climbing 8.8% today, not good news. Natural gas being up almost 5% today, not good news. Wheat being up big, right? Even oil was up today. Corn was up today. That's not good news. The one thing that's good, and this is for Oatly shareholders specifically, is oats were down about 2.5% again today. Oats are just in a vicious bear market of their own right now, and that's good news for all Oatly shareholders out there. But, this is not good for the market. Let's be very clear about this. One of the reasons we're starting to see CPI cool a little bit and inflation numbers cool a little bit, right? And is the fact that some food prices have chilled as far as the commodities go. And we've also seen oil and natural gas chill, which is great news. But here's the deal. If those babies start to pump again, guess what? Inflation's going to go wild again, and we're going to be stuck in a situation. You know what's going to happen? In that scenario, the market's going to tank again if that happens, okay? Because then it's going to be thought that, oh my gosh, inflation is here to stay. That's the way everybody would start viewing it. Inflation is here to stay. So, stocks have to go down. The Fed's going to have to continue to raise rates and raise rates. So if you're going to see the market go up and up and up, we can't have commodities be part of that rally. We do not want to see commodities be part of that rally. That would not be good for us, okay? Let's just put it that way, because that's just going to lead to longer-term inflation problems. That's going to affect the market very negatively, okay? Now, travel stocks, obviously, all made tremendous moves here today. Royal Caribbean up almost 10%. Carnival Cruise Line up almost 10%. You had Ubidi Booba stock up 5.6%. Airbnb up 3.7%. So just everything pretty much across the board. Other than Wynn reported really disappointing revenue number because of Macau. Is still, it's been basically kind of closed down for 2.5 years now, and they opened a little bit here and there, but it's been a mess in Macau, and so they missed pretty bad as far as revenue goes. But you couldn't get that stock down today, in any substantial way. It was down 1% after the type of miss they had on revenue. You would have thought that stock would be down 10%, but on a day like today, when you get all that upward momentum and positivity in the market, you couldn't even get that thing down in any substantial way today, which just kind of shows you the strength of the market. Big tech, it was incredible, the moves in big tech here today, all the way from Shopify at the top all the way down to Microsoft at the bottom. That's a tremendous moves. Look at Tesla. Look at this. Last night I put out a video about Elon Musk selling shares, and I gave a scenario, and I know people thought it was crazy at the time, but I gave 3 scenarios, and one of those scenarios was actually that Tesla stock was going to go up. And basically what I told folks in the video is I said, if we get a situation where CPI comes in better than expected, and you can go back and watch that video, I said if we get a situation where inflation numbers come in better than expected, and it is pitched as Elon Musk is done selling now, and he might potentially buy the shares back, that's a situation that's a scenario where you could get the stock to pump. And it was a long shot, but it ended up coming through, and it's just that's a market for you. And if you would have told everybody the previous day that there's going to be news that comes out that Elon Musk is selling, or just sold roughly $7 billion worth of stock, every single person that knows anything about the stock market would have been like, oh, the stock's going down the next day. The next day it's down, right? The market does things that people never, ever saw coming. It's just consistently what happens in the market. And, there's just, once again, the market being the market. And good old Tesla might up almost 4% after news comes out last night that Elon sells almost $7 billion. You can't make this stuff up, man. You can't make it up. Upstart up 17.5% today. Firm up almost 13% today. Square up 9.5%. Coin up 7%. This is crazy, this coin situation. Because remember, ARK, and Cathie Wood, they sold, 1.4 million shares, I believe. A couple of weeks ago when the stock was $50-something, and now it's 94. That's just nuts, just plain nuts. PayPal's flirting with going potentially back to $100 a share. Hood coming back a bit here as well. So fintechs, obviously, when the market goes a little risk on, these babies fly to the moon. And just look at those moves. Some of these stocks like Upstart and Affirm, they're almost like playing a call option. Literally, that's the way these movements in these stocks are, on the downside and on the upside. It's incredible how many times I'll pull up this fintech watch list and I'll see Affirm or Upstart making between a 5% and 20% move. It's ridiculous. But that's the way those particular stocks act, okay? Now, so let's talk about kind of some warnings for folks, okay? The NASDAQ is definitely overextended. Let's just call it that. This baby, since the June 16th bottom, is up 21% plus, okay? 21% in less than 2 months. That is an absolutely epic move. Now, we got way oversold on the downside. Let's just call it what it is, okay? And I think I mentioned this in a video yesterday. Even bears were starting to say, hey, you know what? I think we're actually going to have a rally coming up here. And when bears start to say you're going to have a rally coming up, that's when you really know you got a rally coming up, because bears usually have nothing positive to say about the market, okay? I remember I mentioned yesterday, even Jeremy Grantham was calling for we're about to have a rally. And sure enough, we have now. And that, oh my goodness. Man, that doorbell scared the crap out of me. Holy smokers, that was no jokers, okay? Okay, so for the people who were buying during the crash, okay? For the people that were buying during the crash, as things kind of played out there, people like myself, right? This is a great moment for you to catch your breath. And if you were somebody that was out there and you were, let's say, from basically March all the way through, kind of the beginning of July there, right? If you were somebody that was taking your income, flushing it into the market, right? As I definitely was, buying nonstop because you saw these great deals as the market crashed. Now's a good moment. The fact that the NASDAQ's up 21% in the past, let's call it 6 or 7 weeks, now's a great time for you to kind of catch your breath, okay? Catch your breath a little bit, okay? And I think this is an important time period to do that. And the reason being, if you were buying so dang heavily during the crash, you don't want to be caught in a situation where you have no cash around. If we have another big, let's call downward move in September or October, which we know September, October can be crazy months in the market, and we've seen that many times before, right? So you don't want to be caught with your pants down, essentially, in that sort of situation, for lack of a better term. You don't want to be caught in a situation where, the market tanks again, and you have nothing to kind of, plug in there, right? And so, yeah, for the people that have been buying, I think now's a great time to catch your breath, okay? Now, for the people that were essentially not buying during the crash because they were scared and they were holding cash and they're like, not buying, okay? I would say to those folks, why buy now? If you were too scared then, why are you not scared now? Do you think things are magically all fixed? Do you think company earnings are magically all fixed, or something like that? Like, why are you buying now when the NASDAQ has climbed over 2,000 points from the bottom? Are you buying simply from the standpoint of like, well, we're uptrending now, so it's going to continue and things like that? Because we've seen it many times in the market, and unless you're new to the market, you go from an uptrend to a downtrend, and it happens in a snap of fingers, and next thing you know, you're like, what happened here? And same thing, you go from a crazy downtrend, and people are like, oh, NASDAQ's just going to keep going down and down, and then you end up on just an incredible rally where the market goes up 20% plus in like 6 or 7 weeks, right? So for those folks, if you think about it, right? Obviously, Russia-Ukraine's still an ongoing matter. That hasn't magically fixed itself. Inflation's still sky high. 8.5% is still ridiculously high. We still are in a problem where if the market keeps moving up, there's a possibility that commodities could keep moving up and inflation numbers can remain at a sustained level. Earnings are not strong for companies right now. We've seen companies either barely beat their numbers, and we've seen a lot of companies either miss their numbers or pull their guidance and not give numbers, okay? And we still see consumer sentiment around the lowest we've ever seen it. So when you take all those things into account, if you weren't buying during the crash, why are you buying now, right? It doesn't make much sense at all because we went up over 2,000 points in the NASDAQ, so now you're going to start buying, right? So for those folks, it almost makes more sense to just stay cash because you were obviously already bearish and you still got the same stuff. I mean, heck, if you weren't buying in April, in May, and June, well, shoot, inflation is even higher recently than it was then. So the situation actually has probably even gotten worse for you, right? So for those folks, I mean, ultimately at the end of the day, it makes more sense to just stay cash because you were already scared and we still got a bunch to be scared of. So for those folks, it's just like, well, what are you doing there? But people do these sorts of things because they start to feel like, oh my gosh, the market's coming back. Oh, it's so great now. And, you got to look at the fundamentals, right? The same problems we had a few months ago are still the same problems we got now. And some of them have gotten actually a little worse, okay? Now, so if we look out to the crystal ball, there's definitely, the market always is looking, let's call it 3 to 9 months in the future. On average, it's usually like 6 months to the future, okay? And so we obviously watch the market just kind of deteriorate in the first 6 months of this year. And we watch the stock market have the worst first 6 months of the year in 50 years. Horrible. Now, the market was right. Let's call it that. The market was right for going down huge. Why was it right? Because what the market kind of had foreseen there ended up playing out. Company earnings have weakened substantially. A lot of companies missed. The operating environment is not good. Let's just call it that for tons of public companies. They're trying their best. But it's very, very difficult operating environment. So the market kind of foreseen what we've gone through here in a very vicious scenario. But the question is, if the market keeps going up, right? Let's just say we keep roaring up. Maybe it knows something on the positive side. Maybe it knows that 23 earnings are going to come back stronger than ever. Maybe it's going to know that, inflation continues to just downtrend in a significant way and that we don't go through a massive recession. And the market's not perfect. I can tell you that. The market's not perfect. But many times the market will tell you what ends up playing out. And we got to say, the market was right in this scenario. The market was right for going down heavily in the first 6 months this year. Because you look at through these companies' earnings, and the amount of companies I personally know that, I keep track of everything. And I'm looking at all these companies, and they're either barely beating or they're missing numbers just across the board. It's not a strong operating environment. And so, I can see why the market went down so dang much. Did we likely get extended too far to the downside? Likely, okay? But that's kind of the first big piece here, okay? The second big piece is we could be getting rug pulled, as they say, okay? So here's a scenario. What I pulled up for you here is actually back in 2008, 2009, all right? And we saw an interesting phenomenon. And that was one in which the market had already started falling, right? And then kind of around August-ish, so almost the same exact time, there's a month gap there because we started climbing back at the end of June, whereas the market really started climbing back here and around August. So there's a little teeny gap here. But the market kind of went on a really strong climb here, the NASDAQ 100, and made actually a pretty darn nice move. If we pull this up a little further here, we got, where are we at there? About 41, and we climbed to about 45 there. So very nice upward move. So it's a kind of a similar phenomenon to what we have now. Now people are wondering, or is it just a kind of a setup and we're just going to go down to the floor, okay? And there's no doubt we could be getting set up for that. But the only way we're going to get that is we need earnings to not just be a little weak. We need earnings to completely fall apart. In order to get this to happen, okay, you're going to need Apple's earnings to completely fall apart over the next couple quarters. You're going to need Google's earnings to completely fall apart over the next couple quarters. You're going to need Amazon's earnings to completely fall apart over the next couple of quarters. You're going to need mass amounts of layoffs. You're going to need tons of small businesses closing shop. That's what you're going to need if you're going to talk about getting the market down to those sorts of levels to fall, let's say just a dramatic crash here. And if you don't get that, you're not going to get that dramatic crash. Could you see a pullback of, let's say, NASDAQ, let's say it kind of does its thing over the next few weeks, just kind of uptrends a little bit. Could we see another drop of 10, 15, 20% in NASDAQ? I think that's fair play. That's fair play in the fall time if earnings were not too strong and everybody kind of gets worried again there, right? But we are also going into midterm time, which we know midterm time in the back half of this year, usually the market does well. Now, we're in a freakish year, so just because the market usually does well in the back half of the year, and especially around midterm time, the fall time, doesn't mean we're going to get it this year. This is a freakish year. We just had the worst first 6 months of the year in 50 years, right? So think about this for a moment. We're in a freakish year. It doesn't mean what played out in the past is going to play out in the future, right? And so I just think that's some food for thought here that we could be setting up for, this could just be a bear market rally and we're going to have a big drop. And that's why somebody like myself, I look at it as kind of like a little bit of a cash up time, just in case. And maybe we don't get this sort of drop, but maybe we get this sort of drop, right? You never really know. And it's definitely a possibility, but you need earnings to deteriorate further than what we've already had, okay? And that's very important. So myself today, it was a nice 6-figure day, if I added up all the different accounts, and that's good. This is the public account here day, 49K. But, for myself personally, the way I look at this is I imagine, I call it floating, okay? This is a floating scenario for me. I don't know if you guys ever just been in the pool and you just kind of like body floated on the water before, or, you know, you got on a raft or something, you just kind of like floated around, and you just kind of let the water take you where it is. Or you ever been to like Maui or something like that and just got in the ocean, and the ocean's incredible there because you can, it's almost like being in a pool. You can just like lay there and just like, you know, the water kind of pushes you around, but it's no big waves or anything, at least where the resort's at and things like that. And so it's really, really cool. And that's what I call like right now in the stock market, where I'm just having fun, just kind of enjoying the time and using this time to cash up, which I think is very important for myself since I bought so dang heavily for so many months there. And if we continue to go up and up and up and the coast is clear, great. That is great for me because I have been a heavy buyer in the market. And if this is just a fake out rally and we're just in a bear market rally and we're going to go lower and starting in a month or 2 months from now, I'm fully ready for that because I will be cashed up in that position and I will be ready to buy again heavily in another crash, right? Which some look at that as maybe that's like the holy grail crash. That's like the big one. The first one was the warm up and then this next one's a big one. And who knows if that happens. That's going to be 100% dependent upon not inflation or any of that. That's going to be 100% dependent upon company earnings. Okay. And just keep that in mind. I think that's very, very important. So I hope this video was helpful for you guys. As somebody that's been doing this for quite a while, I just want to give that kind of warning out there and to everybody watching this, all right? If you're looking to join my private stock group and you want to learn how to value a stock so you know if a stock you're buying is overvalued, undervalued, fairly valued, if you want to learn how to understand financial statements like a CPA would, if you want to get access to my dividend investing mastery course, my Becoming Master of the Stock Market course, my Thriving in a Recession course, as well as get access to our private Discord chat to know the moves I'm making in the market and also interact with not only myself, but all the 6- and 7-figure members, check out the pinned comment down there and apply to join us in the private stock group. Much love as always and have a great day.